From a massive sell-off to claims of currency manipulation, it's been a wild week in the trade battle between the U.S. and China. And that's where we're going to start for today's Friday Business Report. We're joined by SDSU marketing lecturer and co-founder of Bottom Line Marketing, Miro Kopik. Miro, thanks for joining us as always.
Thanks, Priya.
So let's talk about this crazy week. The stock market lost nearly 800 points on Monday, but regained most of it throughout the week. What do people need to know about the ongoing trade tension between the U.S. and China?
Well, it's not going to get resolved anytime soon. And the action on Monday, the Chinese let their currency kind of break that psychological 7-to-1 ratio, and that really freaked out Wall Street. And on top of it, they announced that they were no longer going to buy any agricultural imports from the United States. The Chinese last year bought well over $5 billion in soybeans alone. So this is a big blow to U.S. farmers. And so that kind of really roiled markets. The fear and what's kind of kept Wall Street really concerned is that in the last week or so, they're concerned that the administration may increase the tariffs from the 10% they're going to hit on the 1st of September to as high as 25%. What does this mean for consumers? It's bad news all the way around. Last week we talked about this. Right now, the tariffs are impacting a regular family of four by over $800 in additional costs.
Yeah, it's amazing to see that trickle-down effect to the average American. Moving on to a slightly different topic now, Disney saw its stock actually rise this week after announcing a price and launch date for its new streaming service. Why is this being watched so closely in the entertainment industry?
Because it's really the beginning of streaming wars. Disney, who acquired the assets of Fox, the movie studio, and everything else recently, they're putting together a streaming service that is not just Disney, and they're charging $6.99 for the Disney service, but a bundle that includes Hulu, which they purchased completely from Comcast as part of that Fox merger, and also ESPN. So for $12.99, you get a real bundle of interesting services. Now, if you compete with Netflix or Amazon Video, and then there's CBS All Access, and you start adding this up, a lot of consumers were frustrated with their cable bills. They were paying $50 to $100 a month on cable. Right now, if you just take the four primary premium streaming services, you're already paying the same amount, if not more than you were for cable. So it's going to be very interesting as everyone scrambles to kind of own their content. And Disney's going to launch in November, which is awesome for them because it is during the holiday season. It's a great gift opportunity, and they're going to use Marvel and Star Wars to really drive that demand.
Yeah, excellent points. And everyone's always looking for a deal on their entertainment, yes, of course. A little bit of a different topic now. A big trend in business and food this year has been fake meat. We're seeing more of it in restaurants and grocery stores. What's happening with this Beyond Meats and Impossible Foods?
Well, this has been a big week for these guys. Beyond Meat went public back in March. They're probably the hottest IPO of the year compared to technology stocks. Their stock went from $25 to well over $150 a share, over a 500% increase. They're in supermarkets, which Impossible is not. Impossible is interesting because they're looking to go public. They're not public yet. They've been in a lot of restaurants. So they were in 5,000 restaurants at the beginning of the year. They can't meet demand with their production facilities in Oakland. They contracted with one of the largest meat packers in the world, OSI Foods. One of the biggest things that we learned is that American consumers are ready for alternative meat substitutes. So whether it's Beyond Meats or Impossible Burgers, they can fill that void.
Wow, yeah, it's a trend that certainly seems to be picking up a lot of momentum very recently. Miro Kopik, as always, thanks so much for your insight.
Thanks, Priya.